So we have joining us this afternoon, Pamela Perlich with the Gardner Policy Institute, University of Utah, David Eccles School of Business. Move this over here. And then also we have David Lang with Goldman Sachs joining us as well. Thank you both for joining us this afternoon. David, you made a huge move in 2011 when you decided to locate from Research Park into downtown Salt Lake City, reinvested into the marketplace and expanded. If you could, one, tell us your role with Goldman Sachs, the operations side, and then also what really prompted that new investment into downtown Salt Lake City.
Sure. So first, I'm David Lang. It's a pleasure to be here. I've been with Goldman Sachs for 25 years, and I'm partner and managing director in charge of the Salt Lake City office. So I moved out to Utah about 9 years ago, and when we first moved out here, my Salt Lake City was 300 people. We're now 3,000. So first of all, I have a question for this group. How many people do you think we hire every year into Goldman Sachs? Because it kind of goes with what Victor had talked about. How many people come into us every summer? Any hands? 100, okay. Low, that's low. 500. Why don't we take the midpoint, or about the midpoint, about 300. So every year we're bringing in 300 people from out of, as undergrads. 70% are from out of the state of Utah. So every year we're migrating in about 70% of our 300 people from outside of the state of Utah, from over 100 different universities around the country. All of them are generally moving downtown. And as we've grown from 300 to 3,000 people, a big part of the success of our office, what is the value proposition of Salt Lake City for Goldman Sachs? It's really about talent acquisition, cost advantages to being here in Utah, business resiliency, being outside of New York and not having all of your resources kind of centered in New York State or in New York City. And then there's time zone advantages to being here. So, our board was here in 2014, and when we talked to them about the value proposition of the firm being in Salt Lake City, it was really, we leaned in with cost and the cost advantages to being here. As we've kind of grown and matured here in Salt Lake City, it's really not about cost for us. It's about talent acquisition. And what we're finding as a firm is that there is a huge population of people that want to work for a global investment bank and the experience of working for a global investment bank, but really have no interest, frankly, in working in the concrete jungle of New York City or LA or San Francisco. They want the lifestyle associated with Utah. And so our ability to be able to attract world-class talent with the Goldman Sachs national or global brand, be able to attract world-class talent to here in Utah, and be able to do all of the work that we're doing in New York has been really, really powerful for the firm and very valuable to us from a bottom line perspective. So overall, it's been a very successful kind of experience for us as a firm, and I frankly see no end to us leveraging Salt Lake City and the rest of what we call our value locations within the firm, which is really the outside of the traditional kind of markets that you would see a global investment bank like New York, London, Hong Kong, or Tokyo. We're not having to do the work in those locations, and we're moving to other locations.
Which is precisely why I led with that question, which was a little bit outside of what we had planned, and asked you to introduce yourself, because it was very important to me that we had somebody such as yourself as a business and a company that made such an investment here be on the panel, because I think that's really infused the growth. And I think really without understanding, we can't really fully understand our growth unless we know where we began. So I'm going to go back in time a little bit, Pamela, with you, and have you maybe give us a historical sequence of how our economy's grown, maybe where we started. Here we are today where we have this finance tech boom, and Goldman's is a huge testament to that. So maybe kind of give us some of that historical sequencing that's happened and kind of where we're headed.
Sure. Okay, so this is Utah economic history over the last 150 years in about 2 minutes. So if we roll back to the beginning of the 20th century, Utah's a little bitty place out in the middle of nowhere, right? We're geographically isolated. In fact, the settlers who moved here came here to be geographically isolated. We didn't hit our first million in the state until 1966. We had a classic Western economy that was literally grounded in agriculture and mining, the extractive industries, federal government investments, particularly in military defense installations. We were just really a classic Western economy. And then, we hit our first million in 1966. our second million in 1995, our third million in 2015. And as we've grown then, and particularly I look at 1970 as a break point for the state where we began to diversify. There was a large wave of migration to the state at that time, and birth rates were still really quite high. We hit 1990, and then as the waves of international migration had begun to come in large numbers in the 1980s, those migrants began coming to Utah in the 1990s. And if we do the math on who the last 1 million people were to the state, as the economy now diversifies and changes and becomes much more globally integrated, that's what's really driving this, are our connections to the outside world. If we look at that last 1 million, it looks like about 35% is net migration and 65% is natural increase. But we got to remember that people who migrate are young. And young people are the ones who are having the children. And so these are prime working age people who've moved to the state. So out of that last 1 million people, fully half of them were the new people who moved here and their children, and about half the people who moved here were international people who were born outside the US. So we see this demographic diversification at the same time the economy diversifies. And one other quick note is that the economy that was decimated in the 2008 financial crisis is now being reconstituted in a very different way. And the new industries in finance and tech, those that are connected to the global supply chains, those are the ones that are really driving growth here in Utah. Last year, we remained number 3 as far as the fastest growing state in the nation population-wise. And consistently, it has been this Intermountain region that has grown. And so some of the fundamentals of quality of life, accessibility to recreation, are driving some of the growth in those states too. So we've become something very different. The growth that we're seeing now is not like a rear view mirror, supersized version of the past. It's something new that's being created, and we see that in our urban form as well. I'll stop from there, but it's, we're not just becoming a big version of the old Utah. We are changing structurally, economically, demographically, and in terms of real estate and land use development patterns and so many other things.
And Goldman was one that started to lead the way.
A poster child.
Yes. So looking at that, what do you think our top 3 challenges are that could start to slow growth and in migration of companies and businesses? And David, if you have any insight, I'd ask you to chime in as well.
Well, I mean, I talked about this a little bit earlier. I mean, what are the primary factors that have led to the success of Goldman Sachs in Utah? What are the primary factors? Really, the 4 factors are talent acquisition, number 1. Number 2 is cost, right? There has to be cost advantages to deal with the friction cost of moving and disrupting the lives and careers of people in New York to move them to Salt Lake City, which frankly is what we've done. And so there's got to be cost advantages. We have to be able to acquire the talent that we need and require to be able to do the work that we're doing. This is not an outsourced center. This is not a back office. This is Goldman Sachs here, and so we need to be able to acquire really good talent. And then there needs to be other kind of advantages like incentives and others. But I would say the 2 primary factors for us are people and cost. So to the extent that either of those erode over time, then that starts to erode the overall value proposition of Goldman Sachs growing and kind of flourishing in Salt Lake City. And so, certainly from my perspective as the owner of the value proposition of Salt Lake within the firm, those are the 2 things that we watch very closely and kind of protect very closely and use, frankly, as it relates to future growth within Salt Lake City. So, I would say it's cost and it's our inability to be able to acquire talent would be the 2 biggest factors or risks to the Salt Lake kind of story for Goldman Sachs.
Pamela?
So you want short term or longer term?
I'll let you choose. I know in our kind of pre-discussion we had talked about things such as the air quality, so I'll let you kind of expand from there.
Mm-hmm. So if I think about this place, a place I've lived now since 1986, if I think what are the concerns long term that I have for this place and its future, one of those concerns is that the people who are doing a lot of the planning, and of course we know that the future is not given, we are creating the future. It's my concern that, that may not grasp that what worked in the past, it worked really well for me, it worked well for my grandparents, it'll work well for the future, and not really, really fully grasping that Utah, particularly this metropolitan area, is now a global, an emerging global metropolitan region. That kind of rules of thumb that may have worked in the past simply don't work going into the future for so many reasons. We do projections out to 2065, and we're looking at Utah approaching 6 million people, and the metropolitan area, you know, broadly defined, and looking at Salt Lake County and Utah County and all the areas around, will approach the size of the Seattle-Tacoma, the current Seattle-Tacoma metropolitan area. That being the case, you know, we can't plan for a future of kind of that old Utah blueprint becoming something just larger and larger. That's a concern. Obviously, the physiography of the area and the air quality challenges that we face, housing and transportation costs, you know, I'm thinking very, very long term. How do we build a metropolitan area that works, functions well for people to live and work and for their kids to be educated, that provides supports for young families? We're not really thinking about, you know, as far as the ability of women to, and young families to survive, not just survive, but to thrive. We're not thinking really about supports for young families. Longer term, I think we need to be thinking more about those kinds of issues. What am I talking about there? Affordable, accessible daycare, you know, humane parental leave, you know, supports for young families.
In our call, you had actually mentioned a pretty interesting statistic. How many households are what's the percentage of dual income households today?
I don't know the exact, but it's got close to 3/4. I mean, you've got, people are, you know, the majority of people have to work. You know, this is what we've defined as progress, right? Where every living, breathing person in the home needs to work. And just to be able to pay the bills.
And the services aren't keeping up to the two-income households, which is kind of...
Right, right. So the cost pressures that young people are facing, and you know, as a person who studies and works in demography, I'm always thinking about intergenerational justice and the things that came easily to my generation because of the social infrastructure that was there that are not coming easily for the millennials and the coming generations. You know, thinking about student debt, and maybe you saw the Federal Reserve research that has just come out, and how student debt is an impediment to people buying homes. Surprise. But you know, how many young folks do you know who have, you know, maybe $100,000 in debt, and that could be going into real estate. So a lot of things are kind of out of balance that we haven't sort of stopped and thought, these institutions really worked pretty well for people like me, but they're not working well now. So some intergenerational, you know, those are the few longer term things that I worry about.
Perfect. So David, one of the things you mentioned, and I'm going to touch on a few things, but one of the things that was a driver for you to come here, but maybe not a huge driver, and I'll let you speak to that, but you've already mentioned it, was incentives. And incentives are important. I think everybody in the audience, as they're working with companies, hoping to bring them here, that is definitely something that they're focused on. But I think the latter part is once those incentives run out, do we risk starting to lose companies? Is that something that Goldman's really focused on? Do you think that you just go back and reapply? I think in talking to some of the audience members, I think that's something that would be really valuable to this group.
Sure. First of all, I think, you know, incentives are definitely important, but you know, as I spoke earlier, you know, our four primary factors as relates to the value proposition of Salt Lake and why we've grown from 300 to 3,000 people. Incentives are not one of the primary factors, but it's certainly something that we've appreciated and was important to us. And so, you know, what I would say to this group of people is the longer term sustainability, once incentives kind of end, it's going to continue to be, is Salt Lake City a place where we can attract and retain world-class talent from around the country, diverse talent from around the country where they want to actually stay and work and live? It goes to, I think, Pam, your point where, you know, a lot of times we'll bring people to Utah and there's just not enough here to make them feel familiar and comfortable. And sometimes we have struggle with retaining diverse talent here in Utah for that reason. And so, you know, that I would say is something that's very important. It's something I've talked to the mayor about, is we need to continue to to build and develop options and diverse opportunities, lifestyle opportunities for people outside of the office that make them want to stay and live and continue to kind of flourish and grow here in Utah. I think that's a really important thing. Look, incentives very important, but it's not one of our primary factors. I would say, again, it's continuing to maintain the cost advantages to being here in Utah and being able to attract world-class talent.
And one of those things that we talked about was the live, work, play kind of mentality that we have in Utah and in Salt Lake City. You're from the East Coast. As people come and they come to Salt Lake, what is it that attracts you? What do you like to do? What do you tell people coming in to make sure they tick the box while they're here?
Yeah, sure. So we moved out here I've been in Goldman Sachs for 25 years, as I said. Grew up on the East Coast, grew up in Buffalo, but basically lived in New York City and Tokyo, actually, for most of my career within the firm until I moved out to Utah. And when we first moved out here, my wife said to me, because I was the global chief operating officer for asset management, but we're $1.7 trillion assets under supervision. And when the firm asked me to come out here to Utah, my wife said to me, is the firm trying to fire you? Because we had 300 people and no one frankly kind of knew what was going on out here that had been in the firm for a while. Salt Lake was not very well understood within the firm. And, we moved out here. It was a big risk for us from a career perspective. And, it's 9 years later and we can't imagine, frankly, living and raising our family anywhere else. I mean, it's just a great place to be able to continue my career within the firm, be able to build something within Goldman Sachs or be a part of building something within Goldman Sachs with others, and raising my family. It's just been an amazing lifestyle trade that, I would encourage anyone to take. It's been fantastic for me and for our family.
We're glad to have you here.
Yeah, thank you.
Pam, we touched a little bit on affordable housing in the trend of today and the theme of today of going up. And I'm going to read this so I don't mess it up. But for Utah, the housing year-over increase was recently reported at 8.7%, which has been a record since Zion started tracking it in 2010, kind of getting to the affordability potential problem that we have for housing. And affordability housing, by definition, is that housing would exceed 30% of the combined household income. So that being said, what does that look like? Does that take away the opportunity for home ownership for people? Do we need to change our way of living? Are we more going to go towards a rental market like we saw the multifamily presentation? What do you kind of see that looking like with the quote-unquote affordability crisis?
Well, it's part of this transition from being sort of a smaller place to a large metropolitan region. We study Salt Lake City really closely, and we looked at the change in population from 1990 to 2000. It was really the west side of the city, the coming of new Americans and their large and growing families really replacing kind of an older, kind of aged out population over there. So new populations, diverse populations moving into existing housing. From 2010 until the present, we've had a whole lot of new multifamily housing going in, and so it's new people coming in and living more central city located, more connected to the downtown in new housing, so it's a new kind of growth. And that's the kind of growth you see in big cities, right? Are these higher, more multifamily, more intense living, and that's all related to costs, and accessibility and lifestyle and all of that. But there's no real going back. I mean, we're not going to go back to being a small place that is, really pretty inexpensive to live. It's just not going to happen. So those are longer term trends. I think the housing affordability, we've got to give people more options. People are making their own options. I mean, young people are, to buy a house, they're renting their basement to someone else. There's Bob and Alice in the Tough Shed in the backyard. It's just, people are doing creative things to try to be closer to downtown. And, so urban infill is occurring whether or not it's kind of on people's accessory dwelling units. There's going to be more intensification of people in units per square foot. Same with we heard about the office square footage. It's the same thing. It's just more compact living. So I think the challenge for us in Utah is this idea that we can somehow freeze frame Utah like it was 50 years ago, and we can't. And we have to understand that the new housing options, transportation options, educational opportunities, cultural opportunities, all of that is going to need to be diversified to accommodate the changes that are occurring. We know that Utah has been a place that has been relatively culturally, racially, ethnically, and linguistically homogenous up until about 1970. And then we began to see the change as new people moved here. You know, if you study 5,000 years of human history, the people who originally settle a place put into that place, kind of bake into that place, a cultural and institutional DNA that sticks. And whether or not they remain that founding group or culture, remain numerically a supermajority doesn't really matter. You still see the imprints of that culture far, far into the future. Because of that, in order to succeed, the people who move there more or less have to work within that institutional structure. So I think right now one of the things we're kind of grappling with as a place and as our identity is understanding how we maintain that, what shall we say, the Utah way, but still embrace and welcome new faces, new languages, new cultural traditions, really that global, I mean, we're becoming a global metropolitan area. We're headquarters to an international religion. We have, our universities are in a global competition for talent. We have people coming from all over the world and working for places, and thank you for Goldman Sachs. Our financial sector and our tech sector are bringing people internationally. In the most recent data, that is the data since the last decennial census in 2010, the main migration source region for Utah and the United States is Asia. And that really, I mean, we're talking India and China, and we're talking tech sectors and financial sector. That's the new economy, not the old economy. And so, anyway, you put this all together, and housing is just one piece of this much larger.
And one thing we haven't touched on, but I know is something on the forefront of people's minds out here. What about wage growth? Is it keeping up? What do you foresee?
Well, apparently not. Apparently that
but that's not the end-all solution, correct?
Yeah. But certainly wage growth helps. But if your costs are increasing, and we see this nationally. I don't know if you all. It sounds like you've had a very wide-ranging discussion. If you've talked about inequality at all, if you've talked about segregation along lines of socioeconomics and culture and all the rest, and the barriers that people are facing to economic and educational success, that's certainly something that came up last week in the Governor's Economic Summit and the Chamber and their policy priorities going into the legislative session around educational pathways to construction occupation, educational pathways for all people to get something beyond high school, and the challenges that we face in a lot of it's different by neighborhood, right?
So what I'm hearing you saying is there really is no easy answer. It's a combination of all things, and some of it's going to take us living a little bit differently as well.
Yes.
David, this is a little bit of a politically charged question, but the political climate is a little interesting these days. The Federal Reserve, any insight on what you think, how that is affecting the economy today, primarily in Utah, but also on a more global level, which we also heard from Victor, but I'd like to hear your thoughts as a bank.
You had to ask me that question. I asked you
Yes.
to strike that question. Well, I mean, I think as it relates to what's happening currently, it's unclear kind of what the impact of that's going to be. I mean, definitely people are starting to feel that, and I think everyone's urgently hoping that it gets resolved as quickly as possible as it relates to the existing government shutdown. But I think certainly some of the policies that we've seen over the last couple of years around tax reform and others have been very positive as it relates to the overall economy, and so hopefully we'll continue to see policies that continue to contribute in that way.
So you sound overall positive and bullish.
Yeah, I just tried to skirt the question as effectively as I could in front of 400 people.
I understand. Pamela, the University of Utah, which you obviously work for, but it's a Pac-12 university. it means much more than football. So can you give us an idea how that impacts companies like Goldman, how that infuses talent into the economy, what it helps for as far as recruiting companies to come? If you could speak to that, I think that would be helpful.
You know, there are examples all across campus of what being affiliated with the Pac-12 means for just stepping up in our research, the quality of faculty that we're able to recruit, the students who are coming, the labor markets that we're able to connect our graduates to. It's just a different ballgame than being in the WAC. I mean, or some of the other, whatever the other conferences we've been in. I'm from Oklahoma originally, so you know that's a different sort of a football environment there. But yeah, it's a lot more than sports. And again, I think this is just it's emblematic of these other larger changes that we're talking about. We're not a backwater, little bitty place out in the middle of nowhere with, you know, a quirky culture. No, we're not. We're mainstream. I think the Winter Olympic Games in 2002 really stripped away a lot of that stereotyping that was done about this place and culture and people. So it's just a continued advance of that. It's a great point of pride that the University of Utah has been able to advance. So, you know, in the biomedical fields and our Huntsman Cancer Institute and our Utah Population Database and, you know, so much cutting edge research around population issues and genetics and all kinds of stuff. So it's again, I think it's part of this larger Utah story, which is we are emerging as a more cosmopolitan place, a place that's it's globally connected to labor markets, product markets, intellectual idea markets. Can you imagine Salt Lake City in the absence of the University of Utah? I mean, it's just an absurd counterfactual. And how many of us would not be here? And the imprint of that institution looms so large. And then you've got upper campus. That's what really distinguishes the university, I think, in so many ways.
David, you mentioned about your ratios of in-migration and also employing meaningful employment for people here in Utah. Do you see that shifting with the University of Utah? It seems like they really focused a little bit more on finance. They focused a little bit more on engineering. Do you see that shifting where we can keep some of the talent here, or will it always kind of look more outside to recruit?
You know, any time we can contribute to keeping the sons and daughters of Utah in the city of Utah, obviously that's a great thing. And the University of Utah and BYU and Utah State and Westminster, you know, they're all key contributors to talent to us here at the firm at Goldman Sachs. And so, you know, I think Pam was very eloquent in the way she articulated the importance of the university and the brand of Utah, and certainly the students that we get from there are fantastic. And we wouldn't be as successful as we've been today if not for the University of Utah and the other kind of major universities within the state. Absolutely critical.
And what does retention look like with Goldman as far as keeping talent there and keeping employee retention?
Yeah, I mean, we've been very happy with our retention rates. One of the, certainly as it relates to voluntary attrition, people that leave the firm, we've been very happy with that. And it's been what I would describe as a normal level that we would expect within the financial services industry. One of the more interesting things that we actually just took a closer look at is what we're starting to see is we're starting to actually export. We're a net exporter of talent out of Utah. So as we grow subject matter expertise within Salt Lake City, there is a need for that subject matter expertise somewhere else within the world, within Goldman Sachs. Mm-hmm. Salt Lake is becoming a net exporter of talent. Not big numbers, but to me, it's a good thing, right? It's not material as it relates to the overall Goldman Sachs story in Utah, but it really goes to the talent that we're building and growing, and the fact that it's needed elsewhere within the firm, somewhere in the world, I think is fantastic. And ultimately, you know, those people can come back.
Mm-hmm. And all those networks of people, those migration patterns,
yeah.
They matter.
Yeah.
Relationships are what give life meaning, and in business, of course, relationships are key. We, for many decades that we could track data, saw that our best and brightest graduates would have to leave the state. I mean, but this is the way it is in smaller labor markets, is that there's a net out-migration or an export of educated young people to those larger labor markets. Now we're able to retain more of those folks. So what we're seeing is just the establishment of a different type of migration pattern that corresponds to the different opportunities and industries that are here.
It's not because someone needs to leave to continue their career, it's because their expertise is needed somewhere else in the world, right? And so,
Right.
And
That builds
ultimately
our-
those people do come back.
Yes.
That is actually a very huge trend of people leaving Salt Lake and ultimately coming back and finishing out their career here, which I think speaks a lot to the quality of life and the businesses that we have here. Well, I promised David that I would get him off the stage in time for his next appointment. I want to thank you both. It was very helpful to have you both here for the amount of information that the people in the group, the environment, the climate of the business climate that we have here, the trajectory that we're on to keep it positive. I know we have a labor problem. It's something that we talk about and focus, but I think the fact that we address it and everybody's upfront about it is helping us to kind of weather that storm. And certainly Goldman's presence in Salt Lake City has been hugely beneficial. So I really want to thank you both for being here today and sharing your thoughts and projections on the Utah economy. So thank you.
Thanks. Thank you, Angela. Good job.
Thank you so much.